The Edgeless Horseman here. It's April 6, 2022. I hope you're doing well. I thought I'd answer or try to answer some of the questions that I've received because again, it's like I'm very keen to hear what people actually find valuable, let's say, and not to waste anyone's time. Really, I do typically videos and articles of things I think are important, but I think there's also room for, let's say, specific cases where one can point out some of the, at least the way I go about investing. So first one here is Juggernaut Exploration. I own this one, and I think there's still a banner sponsor. Uh, I haven't put much focus on Juggernaut. I bought it because I thought it was cheap. They have multiple projects. They have a project that has some VMS potential. That's what I remember. Quinton's comment when Crescat got into the story. I'm personally quite confused to what is actually happening. It's not the most communicative company around. They've optioned new bingo property. Apparently, at the end of the day, I think this is just a question of what these are. Pre-discovery exploration stories. So they're farthest down the risk curve. So they are the ones, I would say they're priced along where Bear Creek Mining is priced right now. So not far from, absolutely being, pretty much for free. Not that Bear Creek Mining is for free, but because they have a resource, but I think that's, farthest on the risk curve as well. It's a, high capex, low grade silver play. So I'm not keen on selling anything really down here. If you find something that is, since almost everything is cheap, there's obviously some room for, you're switching from something that's at face value as cheap as another story, but that store you have a better handle on it, you have more conviction, etc. Then, I wouldn't mind shuffling over some positions, etc. In Juggernaut Exploration's case, again, I don't really know what the path forward is here, unfortunately. But I'm not keen to sell at 7.82 million. I think they have, a couple millions even in cash, a bunch of properties, obviously. And it's been up at 48.52 cents. Would I be surprised if it reach that level when sentiment in juniors is up here? No. So I see it as a micro cap lottery ticket that's going to go up with everything else when the tide really changes, because obviously Newmont is already up here and that's the least risky ones. Nothing has really trickled all the way down to the most risky, perceived riskiest stocks, which are the pre-discovery, early stage exploration plays, etc. So my thoughts are, I'm simply I'm hodling this. I haven't sold a share from where I bought in, and I expect simply to, just based on sentiment, I expect to have a, let's say, two bagger at least, and then I can decide. And obviously, if something actually happens, then you'll have to reevaluate the case. Now it's down to just being too cheap due to sentiment that I'm not selling. And on the point of sentiments, like when early last year, I was thinking of buying a new apartment, and then juniors kept going down and getting cheaper. So I basically, the opportunity cost was too large for me, in my opinion, and then they just got cheaper and cheaper. So like, I'm keen. I'm right now scouting, some apartments, and obviously rates appear to be going up, inflation is going up, so Hopefully it will coincide that we have a cool off or even a downtrend in real estate as juniors head higher. So when these sentiment indicators reach this level again or something, then I'll start thinking about selling some juniors because I really want a new apartment. Otherwise, I would wait. If I wasn't so keen on it, I would wait until sentiment reaches here and actually take larger profits. So in short, not too sure what's happening here in Juggernaut, and I'm simply sitting on my hands because I simply hate selling low. I mean, selling 52-week lows, that's gonna requires if I have a much better proposition, etc., then I'll switch over. But in the meantime, these are just pre-discovery plays like Juggernauts. They make up, I don't know, Juggernaut perhaps makes up 0.2% of my portfolio, whatever. So you get some added diversification, and I expect it to simply pop when sentiment comes along. And if something happens on the way, maybe you'll stick with it, because I prefer probable growth nowadays. Palladium One, don't know that story. PGM companies in general, I don't really own any specific PGM companies. I mean, I own quite a bit of Magna Mining, which is primarily nickel and copper, but it has some platinum and palladium. I think it's just too cheap. I mean, I'm far away from being a nickel expert. Even less, I know even less about platinum, palladium. I don't even really look at those charts because it's obviously a hybrid between precious metal and an industrial metal. I mean, I think platinum and palladium will do great, so I'm certainly not against it. And you get that added diversification, and as well as diversification in the metal itself, since it's both a industrial metal, or they are industrial metals and precious metals at the same time. So I'm all for that. Again, it's like at a point in time like this, given the headlines out there, I think you can't really be too diversified. I used to loathe diversification, but now I just want to, if you're even half right, basically, given the themes out there and given the generational events that are unfolding before our eyes, I certainly don't dislike spreading your bets across both metals, jurisdictions, etc. So I haven't really looked into many. I've sold Rupert way too early. I own some Orion, I think. I have a pretty good position in Firefox. It's obviously gone down a bit lately, but they own so much real estate, so it's another case. I mean, based on they could do joint ventures, etc. So I don't think the stock is reflecting their real estate value at all. So it's kind of like in the case of Juggernaut, I'm simply not the least tempted to sell down here. Other companies in Sweden or Norway, I think there's like Playfair Mining. I think the ticker is, what is the ticker? PLY. Obviously another one that's again pre-discovery, so they're absolutely shot to hell in terms of price. I haven't looked too much into it. I think it's a legit team, and I think insiders and big shareholders have been quite active. At least this, here we have an actual insider. So I mean, I think when the sentiment changes, I think you're gonna go back to the highs here. So it's like 200% in Playfair within a year or two. Wouldn't be surprised at all if they make a real discovery, etc. Obviously, you can multiply that 200% by some factor. So without knowing more about it, I can't say much except that it's obviously, must be cheap because every pre-discovery junior is basically cheap, although they're riskier obviously. But if you, I mean, any of these cases, if you just hodl any of these super cheap microcaps pre-discovery, if they make a discovery and you hold long enough, obviously they have 10 to 20 bagger potential. But I would just be very personally. I think I wouldn't be selling down here at least, and if I had more dry powder, I might take a punt. Again, simply because of when this turns. My allocation between base metals stocks and precious metals, a good question. I'm not too sure actually, because there's obviously a bunch of hybrids. Some have both base metals and some have both base metals and precious metals. But I would say that I think like 70% are gold focused juniors, because I think the gold juniors are cheaper than the silver juniors relative to the price of the metals. Base metals juniors are probably very cheap as well, more akin to copper I think, but then at the same time it's like, okay, the base metals have been running, and yes, the future supply demand picture looks very favorable. You've seen the headlines of world needing multiples more copper mines and nickel mines, etc. At the same time, if we go into a global recession, demand can really get crushed. Meanwhile, I don't think gold will get crushed in that scenario. I think actually gold demand might increase. So on a total risk reward basis, I still think gold juniors are superior to everything else basically. But I own nickel. Because that's one of the most favorable, I think, base metals right now. Saw some headlines that BHP says we're gonna need to up the supply by like 27-fold in a decade or two to meet the EV demand. But of course that's also predicated on the fact that the EV trend will continue like it has, and I'm not too sure about that. I mean, who knows, maybe it will. But I mean, compared to 2 years ago, I think I didn't own any base metal play 2 years ago, so I am a bit more diversified. And of course it's like a bit of a perfect crime. I mean, if something is cheap, it's cheap based on the current price of whatever metal, etc. It's like why I don't think it makes sense to, even if you thought that, well, gold is down today, I think there's a trend, a short to medium trend down in gold. I mean, I don't care. The juniors are pricing in way lower gold price than where it is, so it's like that wouldn't make the juniors cheap, because it's a completely different thing, the companies and the metals, and you can see that there's even a complete dislocation between junior miners and large miners. So it's like, I think you should always be aware of what you're actually investing in and how cheap that is, not just look at if you think Newmont is going to have a downturn, etc. So I better sell my junior at 52-week low when Newmont is coming off a 35-year high. I think those are completely separate issues, basically. Thoughts on Brixton Metals? I haven't looked into it too much. I owned it way back when, based on their silver project. I don't remember the Langis or something. I haven't looked into it too much after that. Obviously, I saw the Crescat video on it. It looks very, very interesting. I'm just gonna look at the valuation. 46 million. Yeah, I mean, it's at face value. There's certainly a bit cheaper ones, but I think they have a lot going on. They have a bunch of targets. I mean, they have a big porphyry target, obviously. I'm not typically I'm not super bullish on very deep porphyry targets, or very deep, quite deep in remote areas, but they have very good gold targets as well. Uh, Obviously, insiders are bullish. I mean, that's going to mean something. And I think they have a bunch of assets, etc. So it's like if you split the market price with the amount of assets and the quality of the targets, etc. Brixton is probably cheap like most units right now, and not the most favorable share structure, obviously. But like every sentiment high, I mean, here it went from a low of 8 cents to 57 cents. I mean, that's a huge. I mean, that's a major multi-bagger. I'm assuming this was from this bottom to this. So again, it's like I'm not keen on selling anything right now. Anything that has any merit, any decent to high quality junior, I think is gonna go up hundreds of percent when we reach this level. So without knowing too much more about Brixton, I can't give a, you know, confident comment or judgment on it. But I mean, insiders seem to be quite happy. I know Quinton likes their targets, and they have a bunch of, yeah, okay, they even have a deal with Friedland, for example. So it's, I mean, if I had to guess, I would think it's really cheap. Elevation Mining, the name rings a bell. So does Northstar Gold. I think I looked into them a bit, but I haven't dug into them enough so I can really comment on it. And again, that this is the, in my opinion, the luxury problem we're having right now. There's, I think I could make, like, I don't know, 10 portfolios with 10 names each, and you know, unique to each portfolio, and I think you could still have massive returns in the future, you know, junior miners, because everything is pretty much cheap. So without even, you know, knowing a lot about them, I'm just, again, probably some other names you can just ride for this sentiment, if nothing else. Apollo Gold and Silver, I try to dig into that a bit. That looks like that actually looks, I think that's Apollo Silver, right? 79 million. They're quite advanced one. So I'm expecting this one to have some pretty good beta. Yeah, last insider bought 5 days ago. Good sign. Okay, not a huge amount, and but down here we have, you know, from January at much higher levels, and the same person bought a month ago or so. So it's like, yeah, like everything else, it's risk reward. I think they have a very big silver deposit. I think it's in the US. They're gonna be drilling, etc. So it's like, from sentiment alone, that's probably gonna at least take out the high. So I would expect to see at least a double within a year or two. And if we really get going and the project gets better, I mean, hold long enough, and this could probably be a, you know, significant multi-bagger. Atlas Salt, sorry, but I don't know anything about that company. I never even heard about it before. My take on prospect generators, I think they are incredible risk reward. Some, I mean, like strategic metals here in the purple. Down here, it was trading at cash value and the value of their marketable securities. So you had like 128 projects and 11 royalties. I mean, you have to be a complete moron not to realize that's cheap. So from a risk reward perspective, I think prospect generators, juniors, because they're treated like most juniors, even though they have a completely different risk profile. I mean, many project generators are probably less risky than, in terms of, you know, going bankrupt, etc., less risky than, you know, typical mid-tier or whatever, and a lot more upside, obviously. So I think they're extremely, I mean, if let's say you have a portfolio like 30 prospect generators, juniors, good ones. If you would just hodl them for 10 years, I think you would crush almost anything. Downside is that they are typically insanely boring unless they make a significant discovery. So, from a theoretical standpoint, I think they're probably some of the best companies you can own, assuming they're good prospect generators from a risk reward perspective, because especially now, I think downside is, pretty much non-existent. I mean, again, it's like when I talk about risk, I'm not talking about volatility. Anything can go down 50% that shouldn't go down. The question is the companies that goes down and should stay down. Obviously, like in the case of strategic metals, when that gets priced at cash and marketable securities levels, obviously that shouldn't stay down there because that's way too cheap. But that could still crash 50%. It's just that the mistake obviously would be if you buy it cheap, no-brainer cheap, it goes down farther and you sell it for no other reason than you're fearful or whatever. I mean, that's a huge mistake. Because like you see, every time it reaches this market peak stupid zone, within a year or two, it's up, a couple 100%. I don't see a change in that. I mean, I think we're in for a superb commodity bull, especially in gold and silver. So I think, these sentiment highs here, I think we're going to go way higher. But in the meantime, I have a price target up here for sentiment and juniors. Then I think we'll actually break out of it in the longer time frame. But no, I think prospect generators are great, super boring, and that's why they're also so cheap and provide really good risk reward. So if you planned on going away for 10 years, whatever, I would probably just diversify across a bunch of prospect generators and come back, and on average they'll probably be up, I don't know, 300%, and some will be up like 20 bag or whatever, the ones that made a discovery. And you can have spin outs, etc., because in the case of strategic metals, if you have 128 properties, if you spun out a few or whatever, obviously that could compound like hell. Yeah. I hope you can read this question here. I'm just going to zoom in. That's a good question. Like I stated before, I think I'm very bad at selling. Either I sell typically too soon or not at all. And all of that, in my opinion, can be forgiven as long as you buy low. So that's why I keep, you're probably aware of me pounding the table and, throwing out, calling it no-brainer sheep, etc. Because obviously, if you just bought down here, if you got in here, it doesn't make much sense to sell when it gets low, etc. But to more answer the question, I try to keep in mind the size of the holding, etc. I've had, let's say, SK for example, because I got into SK in a private placement, and I had the shares in physical certificates, so I didn't even know really how I would sell that. So I just hodled from the beginning, basically, and that's been my main earner, and that's why nowadays I talk more and more about just hodl growth, because there's a ton of examples where I have I think wrongly sold way too early in growth stories. And as I've said before, I'm always 100% invested. So when I'm selling, it's like I'm buying something else. I have I have 40 to 50% corrections in my entire portfolio. I've had like 4 corrections, I think, to the tune of 40 to 60% from the 2015 bottom. Sometimes, when I was extremely concentrated, let's say. So I have huge corrections. It's just that I always, keep in mind the risk reward. So down when we were at a sentiment low, I mean there will be some juniors where you could see 200%. There will be some that you can see 400%, let's say. Or even up at sentiment highs. There might be a new store that comes out that's really cheap. There might be unknown stores that are really cheap, but a lot of the stores are incredibly expensive. So since I'm a stock picker, I will be completely out of this gold sector the day I can't find a single company that I think is undervalued on the next 10 to 12 to 24 months ahead, let's say. So it's like I don't have a good answer for, selling. Sell when, well, a few things I guess is that sell when you're uncomfortable with how large your position is. And that's the same thing with, you see stores out there that appear to be cheap, etc. But if you don't have the conviction, if you don't know why you own a stock, I mean, I'm missing, I'm gonna miss 99% of all 10 baggers. That's just how it is. But you don't need a 10 bagger. My goal is to have, 50% returns on average on an annual basis. So it's like without conviction, I think you're setting yourself up to do stupid mistakes, like selling low, buying high. Because if you don't have a picture of where what you think the company's worth and what do you think it's going to be worth in the future, then you're kind of lost, because then you have no idea really why you should be buying when you should be buying, or why you should be selling when you should be selling. And again, it's like the simplest thing I think you can do is again hodl growth stories, because if we have let's take a company here, take Goliath Resources. I know I talked a lot about this one, but like on the topic of selling, take Goliath for example. I mean, that's a high octane growth story, obviously, where I think there's probable growth. Okay. This is going to be a more, I mean, it's a unique story in that the receipt of how good the system is might come very quickly. So, it might get apparent that it's very good, or maybe not so good, etc., just from this coming season. But let's say you have a I'm trying to find the okay, I'm just going to use this as an example, not from a technical perspective, but it's like let's say your time horizon is what, like 2 years. So somewhere around here. Let's say that's your case. I mean, this is probably not the best example, because it's not gonna be a gradual grower, I don't think. I mean, it might grow a lot just in the next campaign. So it's not like some place like Great Bear, they drilled for 4 years and incrementally proved up ounce after ounce. But let's pretend this is more of a potential steady grower than a growth all at once kind of story. So if Blue Sky would be materializing, let's say, maybe it will be trading up here. And as we get more information, we learn more about the story. So you obviously adjust if, like, the next the holes this coming drill campaign are really good. Maybe it's gonna go beyond that, grow beyond what they think they have, or open up more than the base case. So maybe this would be the trajectory, etc. and if it's good, maybe it's trading here. I actually think this is way too low, these levels here, I think. But anyway, so I think that on the point of selling, because I find it so hard to know when to sell, except if you just actually strictly stuck to this. I mean, in hindsight, it's taken me up to the last year, or whatever, to really fully appreciate just how much sentiment rules everything in the short term, basically. And if you have a wide range of outcomes, but you think it's at least a probable grower, then I don't worry too much. As long as the story has probable upside, that means they're probably gonna increase value. Then you don't really need to think so much about selling until you actually need the money, or you find another story that's actually just better. So I think actually it's a good point, perhaps, that if you're a better buyer, if you're good at buying, sell a story if you find a better story, and maybe not have too fixed of a price, let's say, because I mean, again, I sold Rupert way too early. I sold what was it called? Oh, I don't remember. I mean, there are some stocks I sold after they went up 60%, growth companies, and now they're up 1,000%. So it's like my biggest problem has been that I'm very good at buying, but I'm very bad at selling when in terms of a specific company, because I've been fully invested all this time. So I mean, I have had very good returns, and that's simply because I'm a very good buyer. I buy more and more and try to reshuffle to the best buys. Uh, Meanwhile, I'm very bad at selling. I have no idea if I'm selling low or high most of the time. So this was probably, I don't know how helpful this actually uh, was, but at the end of the day, I simply buy when it's cheap, and I'll buy a cheap store when I find one, and sell one that I don't think is as cheap. So it's basically an arbitrage between it. I'm not getting out of the sector completely, etc. I just keep on reshuffling to cheap. So I always want to have an expected return that's going higher. So let's say you own 10 stocks. They're up like 300% in a year. And you have no idea. It's like, okay, should I sell or buy this? I'm not 100% sure. But you find 10 other stocks that are just blatantly undervalued. So that kind of takes care of the sell decision in a way, because let's say these stocks you sold, where you're not sure if you sold too high or too low, maybe they go up 200% more over the next year, but the ones you bought go up 300%. So even if you're at surface wrong for selling the 10 stocks because they kept on going 200%, but if you bought cheaper stocks, that takes care of it. If you bought shares or stocks that had even higher expected returns. So I guess I'm just thinking out loud here, obviously, but I guess the main point, when I reflect on it myself, is like, I don't need to be too good when it comes to selling, if I at least am very good at buying. And that takes care of itself if you're, in a way, if you're fully invested. Because you'll be selling something you don't think is as cheap as the things you're buying. So even if you're right or wrong, but if you're right on the risk reward being better in the stock you actually bought with the money you got from selling another stock, I mean, things are going to turn out well. And that's pretty much been my strategy since I'm 100% invested. So the problem of me being a bad seller or market timer hasn't really affected my returns that much. Hey, maybe I would have even better returns if I actually was better at timing. That's just what suits me. I'm a value investor. I get greedy when things are cheap. And so I automatically sell stuff that I don't think are as cheap. And I have no idea if those are, good or bad sells, etc. I mean, in hindsight, I put in a bid for Great Bear at like 2.5 or $6. I think it went down to 2.7, and I just, threw up my hands like, well, it didn't hit my bid. But in hindsight as well, it's like I didn't have much conviction in terms of Great Bear. I didn't see the future as clear, so I would probably just have sold that. If it went down to $2.6, I got my bid filled. I probably would be out of it at $3.2 because I didn't at the time appreciate the merits of probable growth to just sit on your ass. I would be happy with, a 50% return, and then I'll look for something that's so cheap that it's like, yes, this is going to return 50% as well. Kind of on the lines with like Juggernaut. I think at next sentiment peak that's going to be up, let's say 100, 200% if I had to guess. So I'm that was my old style. Nowadays I don't do it that much, but in the case of like Mayfair Gold, which I think was a great example, which you thought as well. I bought Mayfair Gold soon after it listed. I bought Mayfair Gold around here, and it got obviously washed out, kicked in the nuts, so down like 70%. What's the worst thing you could do here? I mean, the story was growing. They have like 4 or 5 drills or whatever in Canada. I'm guessing like 3 to 4 million ounces soon. Obviously, selling here would be a mistake, but most people can't handle the downturn. And if you would be fully invested in Mayfair Gold here, if you put 100% of your portfolio here, that's obviously not too great. I mean, you're probably gonna make money anyway. I mean, again, at the next sentiment high, if we're at the low now, I mean, it's probably you're gonna make money on Mayfair, I think, even if you bought here. Perhaps very good money, given enough time. But the thing is, okay, you have this stock down 70%, and you already thought it was, fairly cheap here. Now it's just absurdly cheap. Okay, let's say you have a stock that went something like this, because again, sentiment takes down everything. Maybe you have a stock that goes like this. I mean, depending on the cases for each particular stock, I mean, let's say this stock that performed like this hadn't really done too much, so that was, it's fairly cheap still, because juniors overall are cheap, but this just got, let's say, absurdly cheap. So then you sell this one, and you buy that one, and the expected returns, I mean, or in hindsight, the returns were like 200% in that time period. Maybe this one did, I don't know, 50% or whatever. So it's like you can claw back, and you can, again, I don't see this as a mistake. It's just the market did what the market did. So if you're very good again at buying, which I think I am, I simply sell the ones that I don't think are, let's say this is absurdly cheap, this is very cheap, and this is, still cheap. I'll sell the cheap one to buy the absurdly cheap, and then that's gonna, when sentiment changes, that's just gonna, ricochet and give a boost. That's why when my portfolio goes down, it typically goes down along with the sector, like, say 50%. But when they turn, I typically have reshuffled in the ones that I think are the absolutely cheapest, the ones that's like easily gonna go up 100% and probably more. So typically my upswings are way higher than a trading sardine that reaches the same peak all over again. Because when I go down here, I go up here, let's say, when it turns, because I'm in the cheapest stocks I can possibly see. Then I go down 50%, but maybe my portfolio just goes down here, and then I do the same thing. I pick up the most absurdly cheap juniors I can find, let's say. So the next high is way beyond here, and the next sentiment low is here. So that's how I compound my portfolio, simply by being quite good at buying low. But the thing is, obviously, the hardest thing seems to be to buy low. to trust that this is absurdly low, this is priced way too low, it should get rectified and go higher. So that's why I can afford to buy here, here, all the way down. I can afford to buy, any sentiment environment basically, because I then just take advantage of what the opportunities are in front of me. Because again, it's like now, for example, there's like 50 to 100 opportunities out there. When sentiment gets high again, there might be 4 stories that are quite cheap, and the rest are like, overpriced. So let's say 90% of the stocks are going to go down 70% in the next from the top in sentiment to the low in sentiment. So 70%. Maybe you have a few stocks that are already cheap. You found some hidden gems. Maybe they go down 40% when sentiment bottoms. Then you could still reshuffle that in the ones that might have gotten killed. And again, you save money on the downside in a way, and you put yourself into, you reshuffle, you use the purchasing power that went down 40% to buy the stuff that's down 70%. So that's basically an opportunity arbitrage. And the ones, when they turn, the ones that have gotten absolutely slaughtered, at the next sentiment peak, they might go up 400%, and the ones that didn't go down as much go up like 300%. I mean, that's still good, but anyway, it's like you can't supercharge your returns by just being a good buyer, I think. Monarca, market cap. I still have, not a big position because it's gotten absolutely slaughtered. It's hard. It's obviously, it's like with companies, I prefer to, I want to see the path forward, etc. Because otherwise it's hard to have conviction if you can't see what the next 12 or 18 or 24 months are probably going to look like. And I have no idea what Monarca is going to do, except that it would have to be a serious multi-bagger, like 900% to go up to its peak here. So would I be surprised that, assuming like Monarca doesn't go bankrupt or whatever, that it's going to be up, let's say 500% from here at the next sentiment high? No. So I can only say that, I get tempted just looking at this to buy, but of course, the hard part is like for Montoro, for example, which I think is just stupid cheap. It's not easy to buy something and then sit through 6 months or more of a downtrending action. So that might be the case for Monarca, for example. That it's like 3.8 million. Maybe they do a raise, etc. But it's like this might continue for, who knows, a day, 6 months, no idea. It's just that I think this is gonna, when we hit sentiment high, that's one of many that will be up several 100%. But obviously, people have, beyond having the problems of not being able to buy low, buy low is hard enough. Having the patience to buy low and sit out through lows is a completely different thing. On Twitter, etc., you have people commenting a lot on the daily swings of their portfolio. How do you have patience when you look at that? And that's going to affect everyone else to start thinking about the daily swings. I have no idea what my portfolio is doing today. I don't care, because again, it's like I'm in it for at least this move here. So I don't really care. The market is just stupid. The market is stupid cheap because the market is stupid and fearful, and there's no money going into the juniors. But yeah, on Monarca, if I had, I think, if I had to use a crystal ball, if you bought a Monarca now, I think it'll be up a few 100% if you just went away for a year or two. That's just my guess. I'm actually tempted to buy this just by looking at this. I mean, 600 shares volume. I mean, imagine if some interest comes back, they have one news release that's good or exciting or whatever. It's like, I mean, if someone put in $20,000 into this stock, maybe it's up 30%. So again, when the masses really come, I mean, you're gonna see moves that you can't believe when we go up here, and that's gonna bring everything with it, basically. You can see this is mostly sentiment, and obviously they drilled and didn't hit what we hoped for, so it's not like nothing has changed. I mean, if they would have hit, the stock wouldn't be down here, that's for sure. But it's just looking at price, it appears to be incredibly cheap. It's just, again, I don't know what the path forward is. So if I can choose between Monarca and a stock that's almost as cheap, where I think I have a good grasp of the path forward, that they have probable good news coming, etc. Obviously, I would stick to that one anyway. But I don't. Let's say I don't think you're gonna lose money on things like Monarca if you just hold it for a while and wait for sentiment. Irving Resources. I think I did a video on Irving not too long ago. I mean, one of the absolutely best portfolios, I think, in the world. A bunch of projects in Japan. Obviously, they have, I mean, because they're in Japan and with COVID, etc. So they've had big problems in terms of delays, but they are partnered with Newmont. Let's just look. Okay, we can look at a chart here from Irving. So, well, first of all, it's like, well, this looks like a rounding bottom pretty much, and this is the same for almost every. You see these patterns in the perceived very risky juniors right now. So there's a bunch of companies, again, like Newmont is relatively speaking up here already. Juniors like Irving's down here. Obviously, it's not the cheapest stock around. I mean, it's still 80 million, but if you divide it by the amount of projects, people involved, backed by Newmont, etc. I wouldn't say it's expensive. I think it's based on the geological potential, it's incredible, but it has the unique thing of like they have too many good targets and not enough drills, etc. So it's very hard to say much except that I think they have one of the best portfolios in the world. They have the largest gold miner in the world as partner and backer. Obviously, huge upside potential. I mean, if they would find another Hishikari, etc., I mean, that's worth billions. Question is, of course, path forward and time frame. Let's just say again, it's like I think Irving is gonna get back to these levels again. It's just that I don't know when that is. But I certainly like Irving a lot. I think again there's a wild card with it being Japan, etc. So now it's one of the more trickier ones. If they announced they're bringing in more drill rigs, etc., or something happen. I mean, this one of those stories that you're basically trying to push the Hoover Dam through a garden hose with the amount of projects and targets. But I wouldn't say I wouldn't be surprised. No, I simply like it based on the quality of their projects and the amount of projects, and it's in Japan, so you get that kind of diversification. Then they have the smelter flux credits. It actually appears that this might be perhaps not double bottom, but at least this is strong support. Let's just say that I think Irving is gonna go higher unless something Japan related happens, and if things turn out well, it could go a lot higher. But other than that, it's again quite hard. They've obviously made some geological discoveries that there's appears to be another epithermal system underneath the near surface ones at Omu. So that could surprise, but it's not the easiest thing to hit these boiling zones in a epithermal system, and now they obviously would have to drill deeper if that's the mothership, the real mothership that's deeper below. Certainly one I'm keeping my eyes on. I still, I have it in the family portfolios, etc. I was super excited about Irving until COVID hit, and that's also, it's like, I mean, I think Irving gets a lot of shit because of this share price action here, but it's like same with Lion One Metals. I mean, the COVID thing was a black swan. Nobody had an idea when that was gonna, be subsiding, let's say. So this chart would look totally different if COVID hadn't happened. So again, looking at price and just, it was a mistake to buy Irving here or here or here, whatever. I mean, Newmont did, so it's like how much of a mistake could it have been? But most people just look at the share price and then dictate afterwards, yes, it was a bad buy, or lol, you're in Irving or whatever. It's like, like anyone predicted, a global pandemic, etc. No, so it's like, I don't beat myself up too much about mistakes unless I know it was a mistake. And just a declining price, like I showed with Mayfair Gold. I mean, I didn't think I made a mistake buying that early. Obviously, in hindsight, you would have waited, but I was able to take advantage of the opportunity. So if I didn't have a position in Irving, I certainly wouldn't mind buying at 3-year lows. And again, get some added diversification, because who knows, maybe Japan will be a pretty good place actually to be in the future. And again, you have the smelter flux credit, etc. So it's a very unique story. Let's put it like that. But they have amassed a true empire in Japan, and obviously there's been, I think, BE Metals or some other, well, them and maybe even another company has moved into Japan. So it actually it appears that Japan is becoming quite hot, and I think they basically plucked out a lot of the cherries in the Japan cake. So I think Irving has a truly world-class portfolio, and it's simply a matter of the pace of unlocking it. And when that changes, let's say, then look out. I mean, suggest for years to do basically gist of it that Novo should list on the ASX. They probably should. I have no idea. I'm not, my thing is not let's say corporate finance, and I'm not too knowledgeable how the Aussie market works, etc. I could ask. Could send forward your suggestion. One of those things, I think that, okay, if I think one of my strengths is to well, first of all, I'm quite bad at, I don't go through capital structures too much. I typically have no idea when shares become free trading, etc. So I typically have bad timing, actually, that I'm buying something and it's that's gone lower, and maybe it's going even lower because the selling was people front running shares being free trading, let's say, and then it dips even farther. So I typically do that, walk on a trap door, let's say, in a bunch of stocks. I simply have no interest in it. That's too boring for me. I try to focus in on the big picture thing, because obviously it's like if shares become free trading, etc., that's not gonna dictate the long-term value of any company. Obviously, that's just market durations. It affects price, sure, but if you're right on the actual case of a company, I think stuff like that are details. So I don't know what the if it would be correct, let's say, to list on the ASX, and in uh, would it help the stock go higher? Perhaps. I mean, and in that case, you would be happy with it going higher, because obviously all else equal, if just share price goes up, that means opportunity is decreasing. So like for me personally with Novo, I mean, I've been buying recently. I don't mind having stores that are cheap for extended periods of time, because again, my whole investing strategy is basically buying stuff that I think are cheap, and then rebuying other stuff that's cheaper when the first thing I bought maybe doesn't become as cheap. So I don't. The worst thing for me would be if every story I own that I like would go up at the same time, and there would be no other bargains, because then I don't have anywhere to get outsized returns in the future. So again, from a personal standpoint, I don't mind Novo being cheap right now. I don't mind if other stores perform better in the short term, because then I can simply reshuffle some money into stores like Novo that has, and Irving or whatever, stores that have been lagging. Because obviously, if you're looking at Newmont, for example, I mean, even if I'm a gold bull or a gold mining bull, I'm not too keen on buying Newmont here when juniors are down here. Well, again, yeah, I can send see if I get a hold of Leo and ask. Let's do one more. Northern Lights Resources. I have never heard about a company before, so I can't really comment on that one. Okay, that's a quick one, but I'll try to look into it. Thanks for the tip. Walker River Resources. Yeah, I remember there was some, let's say, a pump on Walker River Resources a year or two ago. It appears that they basically re-drilled something that was known already, and I've seen some, let's say, famous pumpers talking about Walker River Resources again, and they did a monster hole recently, I think. I simply have a problem with past experiences, seeing that okay, that was a parent pump, and then yes, it basically got destroyed. I think that was back. I don't remember actually. So I think it was around here. Let's say they did a monster hole, etc., and that was all there was. I think they actually was drilling something, and then we recently now obviously had a massive pumping action. People posting on Twitter to me about this. So it's like, yeah, okay, there's a bunch of people that wants to get the drill hype going. And they and obviously if you look at like 7.62 grams per ton over 48 meters, obviously super, incredible barn burner drill results. But like I have no idea, because I haven't looked into it. Maybe they were drilling right down a vein or whatever. So maybe the like true thickness here could be like 3 meters or whatever. I simply don't know. I just have a bad taste in my mouth from the last time a bunch of people was pumping this story. So maybe I'm missing the opportunity of a lifetime, but by not being in it. But before I can see that things have changed, that it's just not another, let's say, pump, I'm not too keen on getting in. And of course, like always, right now there's bargains everywhere. So it's like, even if I miss honestly, even if I miss like a 20 bagger, if I get a few 5 or 10 baggers, because I'm not comfortable anyway that I would take a massive position. Let's say I would take a 0.5% position in Walker River Resources, and get a 20 bagger. Whereas I see a case that I really like, have the conviction, I take a 5% stake. I mean that could go up just what like I don't even remember what I said, but you get the idea. If I have a 10 times position in something, I'm pretty sure will go up a few 100%. A stock like this where I have low conviction and I'm not comfortable taking a large position, that would need to go up maybe insane amounts to actually reward me as much. So I just try to stick again with companies I have conviction in. And my aim, again, sounds boring perhaps, but I'm aiming for a continuous 50% return. And I can see that again, if you just most of the stores I went through recently, I mean, I think a lot of these are gonna have from here pretty easy 50% return, just as we're getting back to this level. Okay, I'll wrap up this video. I think I hope I saw someone complaining a bit about my rants not being as valuable, let's say, as my written articles, and I understand that. Thing is obviously that it takes a lot of time to write those pieces on investing, etc. I mean, it can take hours, can take days, and when I do these videos, I can cover a lot more ground in a quick way. So I think actually I might be more readily helping with these videos, whereas articles or stuff that you can more easily go back to. But if there are really important concepts, I mean, I think I've covered a lot of concepts in. If you click investing strategies, I think you can go through a lot of these, which I'm pretty proud of. I think some turned out really good, and you can get a lot, reread a lot of concepts that I've done and which I've covered lately in videos, etc. But if I find the time, etc., I'll for sure be doing that. It's just right now there's a luxury problem because, I mean, typically when we were in this sentiment environment closer to the highs, you would find a gem or two every other week. Now I could honestly like do a piece on pretty much any of my holdings, pretty much, saying that these are too cheap, because most of them are, and it's just not my holdings. I mean, there's a bunch of juniors out there that are incredibly cheap that I don't own, for better or for worse. It's simply a matter of there's an opportunity overload right now. So it's yeah, I could write about any company basically and come to any junior company that I own and come to the conclusion like, yeah, this is super cheap, etc. And in that case it becomes a bit like the boy who cried wolf, like, yeah, this is cheap, and then next week this is cheap, but at the same time that's true. That's why I'm not selling and buying instead every week. Consider me biased with everything I talk about. I try to be as well. I think I try to have the arguments stand on their own logical merit, and but keep that in mind that I am probably biased, and companies I've talked about, some are sponsors, some are not, and always do your own due diligence and make up your own mind. I have a strategy that suits me, and I have a way of thinking, obviously, which results in said strategy, and that might not make sense or fit everybody, and that's okay. It's just that the important thing is to actually have a strategy and not just be at the whims of the market. It's like, okay, gold is down. It was down yesterday. Okay, now it's actually even for today. It was down yesterday, and let's say someone sold. Okay, why did they sell? Let's say they sold a junior. Did they sell it because it was expensive? I really doubt that. They sold because, hey, I got scared, gold is down, I think my junior is gonna go down. I don't think valuation even plays a part, so I think it's a big joke, basically. And I again, it's like, I'm not even. I'll sell. I'll sell when I need an apartment or want to buy a new apartment. That's probably gonna wait until these indicators get up here. Otherwise, I would probably wait for them to get up here before I would actually take something out of the mining portfolio. But until then, I'm like fully invested. Thanks for listening. This is not investing advice. Wink, wink. Yeah. See you guys.